Good morning, everybody. It's Friday, December 30th. Matt Bennett, good morning.
Morning, bud.
Feeling all right today?
Not too bad. I'm feeling pretty good. I'm tired after all the holiday happenings. Had a house full of kids. Nobody wants to go to bed. I get up early. Doesn't work very well.
These kids need to go back to school. My kids have way too much time off. Like they're just home
I run that
way
stuff
too
too.
much. Hey, before we get started here, so this is the last trading day of 2022. What do you think was the biggest story in the grain markets in 2022?
I could bring up several different things, but you said what was the biggest thing? And me personally, what was the biggest thing? Because I work with farmers and I farm myself, is that at any point during this marketing year, we could have been the worst marketer and still made a lot of money. So it's quite a situation. A lot of times you see a huge dip, summer time frame. We just didn't see that this year. You did get a dip, but then you come right back into a nice rally and through harvest and through the end of the year, you held $6 corn for the most part. You just didn't really have a whole lot of chances to screw this thing up.
Yeah, from a marketing standpoint, it was a good deal on the 2022 crop. Although there were a lot of guys, especially out west, that didn't have much of a crop to market necessarily. So certainly not the case for everybody. The high prices and the margins were there. For me, I mean, aside from that, I'd say inflation and the Russia-Ukraine deal, which were kind of tied together, I think are probably your biggest stories. Like I think some of the buying in the grain markets, arguably at least the first half of the year, had to do with inflation, like the idea that guys wanted to hedge inflation. Money managers wanted to hedge inflation, but the grain markets have kind of like separated themselves from all of that now, I think.
Yeah, I believe so as well. And I think some people were looking around and saying, why isn't this rallying? Why isn't that rallying? Like you look at things like silver market or something like that. I do think that some of those things will have their day, but you got to remember the dollar was strong for the most part all year. And so it's going to be a really interesting dynamic if you continue to let the wind out of the sails of the dollar and you keep inflation at least present. Obviously it's backed off significantly, but with $80 crude oil at times here lately, obviously it's jumping around. I'm not so sure that inflation's completely gone. I just think that it's fading for the time being.
Yeah, you can throw the Fed in there and the rate hikes as part of the story, which again all ties back to the inflation deal. You could throw some of the weather stories in there. Brazil harvested a short bean crop last year. We had a short corn crop this year. So there was a lot of and there was a lot of news to keep me busy at least this last calendar year for sure. Hey, we had a big gap fill on the soybean chart overnight. What does a gap fill mean to you, Matt?
A lot of times there's people that want to see that filled before they see the market go ahead and go in the direction that they think it's going to go. To me personally, whenever I look at this and I look at this market as a whole, I guess I struggle to be bullish up here. You come up here and you fill the gap. I think it gives some folks pause for, hey, maybe now I've got the cojones to step in here and sell this thing. I don't know. I know Argentina is not over with. I know they've still got weather issues, but at the same time, Southern Hemisphere production is likely to be up, maybe significantly. So I don't know. I look at it as you fill this gap, and to me, I would be hesitant to be bullish at this point.
Gap is just an area that everybody watches. It's just like any other point on the chart, and that's why it matters. But we did fill this gap on the March bean chart overnight, which I know is something a lot of people were watching. Brazil's new president says he's going to end illegal deforestation of the Amazon. Do you believe this?
Not really. I think it's going to be a tough row to hoe. I think that Brazil cemented themselves as an agricultural powerhouse over the last several years. Good luck with that. I think obviously it's easier to say it than to do it. And so for me personally, is he going to make inroads to kind of slow this thing down? And yeah, there's probably people on our side of the pond that think, hey, let's hope that this happens. But at the same time, if they were in those producers' shoes that are trying to expand and continue to build what I would call generational wealth, they probably wouldn't enjoy that sort of talk coming from the leader of the country.
Yeah, so this is the incoming president. He's not actually sitting right now. His name is Lula da Silva. He said this in a speech this week. We will do whatever it takes to have zero deforestation. And he is like in Brazil, he's the left wing candidate, or president now. Outgoing president Bolsonaro was the right wing candidate who slashed funding at environmental agencies, all that sort of stuff. They're going to face some obstacles with this plan to stop deforestation. They've got big time budget issues because this incoming president has huge commitments made to social spending. In addition, a lot of conservative politicians are in power in a lot of these big ag areas in Brazil. So it might be easier said than done. And there's a plot twist here, which I told you about. Brazil's new ag minister is a soybean grower from Mato Grosso, and that doesn't mean that he can't be an environmentalist. This picture that Reuters had, it made him look like really evil. So I don't know. The general story when it comes to politics in Brazil is not too far from like what happens here in the U.S. So he was picked by the incoming president because the incoming president thought he needed some conservative or rural support. So it's just a game of politics, I guess.
Oh, absolutely. And I would say going back to something you said, and I think you'd agree with me, is most farmers I know are environmentalists. I mean,
Yeah. Oh yeah.
especially if you're a generational producer, I mean, good Lord, you wouldn't still be on the farm if you weren't. But, I think at the same time, he picks this guy. It kind of shows that, some of the talk might be kind of tough rhetoric, but at the same time, he's going to kind of play both sides of this. And as you said, if you're sitting here in the U.S. and you got a Democratic president and a Republican House, it just makes things tougher going. And that's what you're going to see in these rural areas is that a lot of these folks are going to say, hold on, let's pump the brakes on this. Look at what we've been doing as far as what's this doing for our economy, our export market. There's no question the investment in Brazil has just been extravagant over the last several years. And I don't think they want to see that go away.
They're actually set up kind of similar to the way we are. So in some of these state governments where they farm, like there's a lot of conservative support. Conservatives are 40% of Brazil's Congress. So they've got it's going to be everything when it comes to policy is going to be probably easier said than done in Brazil, just like it is here. There's been this guy made some comments. The new ag minister, he very much is committed to transforming Brazil into the world's most sustainable agricultural powerhouse. They're already the biggest soybean powerhouse, but they want to be sustainable as well. So I guess we'll see what happens. Staying on South America, Matt, Argentina is going to catch some rain the next 4 or 5 days, but then it's going to be dry. Is this the biggest thing driving the bean market?
In my opinion, I mean, I've been telling people that it's more of a soybean meal situation than what it is. Soybean meal's dragging beans along, in my opinion. It's kind of,
Yeah.
you've seen it before, Joe. Like you kind of come in here to the winter time frame and you think this bean market's kind of fall off. And anytime you get Argentina dryness or Argentine dryness, if you will, usually you see the soybean market come alive and then the bean market comes alive. And a lot of times it kind of drags some other stuff along with it. So, in my opinion, you've got to look at South America as a whole. If you're looking at this as a long term, big picture type item, what's world supply is going to look like if Brazil has a 155? I mean, I don't know. You're going to see world supplies of soybeans in excess of what they were a year ago. So my personal opinion is it's been driving the market here, but I think that it's creating some real opportunity for someone who likes selling $15 beans or $14 new crop.
Okay, here's a chart that I had in one of my premium videos yesterday. So this is USDA's projection for combined Brazil and Argentina soybean production. And this number is going to come down by what, 5-6 million metric tons. So
Yeah,
you're going to go from like what, a 202 down to maybe somewhere in the mid 190s, which is still a record combined by a pretty darn wide margin.
easily.
So it's a record by a wide margin because Brazil is in such good shape, but the the shortfall in Argentina matters because 2 months ago we thought we'd be above 200 and now we're not going to be.
Yeah, I mean it's just that, and obviously they put so much soybean meal out on the world market, and so it's going to kind of jumble things up a little bit. I do think that moving forward, and this isn't a discussion maybe for this year, but Joe, I do think that the U.S. is probably going to become you're going to see a bigger market share every year for the U.S. as far as soybean meal exports, especially as this renewable diesel thing comes on. But as far as the short run goes, again, it's creating major opportunity at a time whenever you're still going to be building world stocks. And usually when you're building world stocks, you don't see rallies.
Yeah, I am fairly convinced, and this is just an opinion, and I may be wrong. I think some of the buying interest in the bean market has to do with this crush expansion. I know it's not something that you're going to see in the news wires every day, but people know that this is happening. This is a big deal, and it's not like something that changes every day, so you're not going to see it in the headlines every day. But I mean, big picture, I think that's an underlying supportive factor as well. We had a bad week of ethanol production. Why do you think this is?
Margins stink right now, quite frankly. And you and I talked about this a little bit, but especially when you get out west, I've been doing a lot of work on just looking at basis levels. And normally, your basis levels in cattle heavy country are going to be better, especially if they can't grow as much corn in your Herefords and your liberal Kansas areas. But at the same time, basis is just on fire in some of those areas. Feed yard outside of liberal was paying $1.90 this week over the board. And so, it's what's going on there is that these ethanol guys, the margins are so thin, they're having to pump the brakes a little bit. And I'm not so sure that that's something that's going to go away anytime soon. And so, is the USDA going to have ammo to maybe back off on corn usage for ethanol in January? I'm not so sure that that's going to happen, but I think they're going to have the ammo to do it at some point, because I'm not so sure we're going to be able to hit the target.
1 week doesn't make a trend, but that was a bad week. That was off 6.5% from the prior week, off 9% versus the same week last year. That's weekly production. And then your stocks are the highest on record seasonally. They're up 19% versus the same period last year. So not only do you have poor production, but you've got big time ethanol stocks sitting out there. Gasoline demand's actually perked up just slightly, and I don't know if that's going to make a big difference or not. But ethanol, not the best week of production last week. We had some economic data yesterday. Jobless claims are still low. They did rise. 225,000 was the print. Continuing claims, 1.7 million is the highest since February. Do you have any read on the job market, Matt?
Oh, not necessarily. To me, it seems like some of your bigger companies are getting a little cautious, if you will. But at the same time, right now we're doing work on a house actually, and I would tell you this: people are busy. There's still a lot of folks out there that you call them and you want them to do one thing or another. And I'm talking every area whenever it comes to building. It sure seems to me like folks are still busy, and I'm out in the middle of nowhere, Illinois. So I've got to think that some of your cities is the same, but overall, I think that some of your bigger companies are getting a little bit concerned. Whenever you see interest rates climbing, obviously housing starts haven't been that hot. I think that that's a trend that you're going to see continue. But for right now, I've got to think jobless claims aren't all that bad.
No, these numbers aren't bad at all. And here's a chart. This is file this under charts that COVID ruined. But you're at 225,000. You're very close to where you were pre-COVID, like late 2019. This is
Right.
totally normal stuff. And that 1.7 million, yeah, it's an increase from versus the last 10 months, but it's still pretty darn low. And again, within like your pre-COVID range. So I think the job market is still pretty good, which like begs the question, can you have a recession when unemployment is as low as it is? I don't know.
It's going to be a complicated recession, Joe. I'll tell you what. Obviously,
We might already be in a recession is the
yeah,
thing.
I agree. I agree. It depends on your metrics, and it depends on who's the one that's claiming whether it's a recession or if it's not a
Well,
recession.
it's the National Bureau of Economic, whoever they get to
Right.
decide officially, and they haven't decided yet, even though we did have our 2 consecutive quarters of negative GDP or whatever.
Yeah.
Cattle market was up yesterday. Feeders were up. I didn't even see if there was any cash cattle yesterday or not. I think it was 158 in the north mostly this week.
Right. Yeah. I mean, the thing is in this cattle deal, again, and I think you know where I'm at on the cattle situation. I think that if you hold, uh, essentially, if you don't go into recession, a major recession, so if the consumer feels good, I think that you're going to see a really strong cattle market this year. I think it's going to be maybe one of the more dynamic markets we see. Whenever you look at the fundamentals of the market, yeah, cattle on feed wasn't necessarily bullish, but at the same time, when you look at where we're at versus a year ago, when you look at where we're going to be in the third and fourth quarter this year, I'll tell you what, I sure wouldn't want to be on the wrong side of this thing.
It's one of the best looking commodity markets out there in terms of price action.
Totally agree. Totally agree.
You guys have a meeting coming up in February. This is the agmarket.net winter 2023 meeting, farming for profit, not price, here in Nashville, Tennessee. Tell us about this. And I know you guys have mentioned it before. We wanted to mention it again today.
Yeah, I mean, I just got a chance to talk to Dave Hightower a little bit yesterday because I like to lean on him a little bit for big picture type stuff. He's going to be
Yeah,
speaking, as you know Dave well. I mean, he
I do.
brings a ton of energy, and he's going to talk about a whole host of things that might impact your commodity markets that maybe you don't even think would impact your commodity markets. But he's kind of our featured guest, along with we've got Drew Lerner, obviously one of the best meteorologists out there, weather guys out there, just put some fantastic stuff. So, and then we're going to get you up and talk to folks a little bit. I'm going to talk a little bit about mostly corn and soybeans, but the whole ag market team is going to be involved in some way. Be a really good couple days. Plus, our location is going to be tough to beat right there at the Grand Hyatt's, right there on the Strip. So
we had some nasty weather here last week, but it's supposed to be 60 today, I think. So hopefully you'll catch some of that 60 or 70-degree February weather. But yeah, guys, February 5th and 6th, I'll include the link for registration to this in the YouTube video description. And if you have any questions, let me know, or you can email Matt or Brian or whatever. Anything else on your radar this morning?
No, but it's the end of the year. I'll tell you what, it's been a great 22. We can make it to 23, a great 23 as well, but I don't think we're going to do it by sitting on our hands. So a person has to have a really solid plan for 23. And I think several of us out here can help in that.
Good deal. Well, everybody have a happy new year. Matt, happy new year. We'll talk to you guys next week.
Absolutely.